Do quarterly taxes have you scratching your head, wondering if you're doing them right, or worse, if you should be paying them at all? Well, you're not alone. Don't worry, because today I'm breaking them down into simple, actionable steps so you can stay compliant, avoid those penalties, and keep your cash flow in check. By the end of this episode, you'll know exactly how to calculate your quarterly tax payments, set aside the right amount, and avoid those dreaded IRS penalties. Ooh, no one likes getting that letter with the red print. It is always scary. And hey, if you haven't already, be sure to subscribe because I'll be guiding you through tax season with more must-know tips that could save money and stress.
Here's the thing. Building a business can feel somewhat like a roller coaster. It's exciting, it's challenging, and a little scary. But here's the good news. You're not in this alone. Welcome to In Good Company, the podcast where we bring together entrepreneurs, experts, and real stories to help you navigate every twist and turn of business. Whether you're just starting out or scaling your dream, you're in the right place. So let's dive in.
One of the biggest mistakes that entrepreneurs make is thinking quarterly taxes are optional. I get it. When you're used to a W-2 job where taxes are withheld automatically, the idea of paying taxes every few months feels weird. But if you're self-employed, skipping them could lead to those hefty penalties. And let's be real, no one wants to pay extra money to the IRS just because they didn't plan ahead. That sucks. So let's break it down. Who needs to pay quarterly taxes? Generally, if you expect to owe more than $1,000 in taxes for the year, you're required to make estimated payments. That means freelancers, small business owners, and side hustlers bringing in real income. You're on the hook. So let's talk about those tips, right? Tip number one, how to calculate your quarterly payments. The easiest way to estimate those quarterly taxes is by looking at your last year's tax return. If your income is pretty consistent, take the total tax that you owed last year and divide it by 4. That's your baseline of quarterly payments. But if your income fluctuates, maybe you had a breakout year or you're just starting out and you won't really know what your income's going to be, right? You'll want to estimate based on your current earnings. A good rule of thumb, set aside 25 to 30% of your income for taxes. This covers federal, state, and self-employment taxes so you don't get caught off guard. Tip number 2, the IRS form that you need. This is always a big one. Where do I go? What do I do? If the thought of sending money to the IRS 4 times a year makes you sweat, don't worry. It's actually pretty simple. You'll use IRS form 1040-ES, that's 1040-ES, to calculate and submit your estimated payments. Payments are due in April, June, September, and January. So mark that calendar, put it in there right now. Here's a pro tip. Set up automatic transfers to separate tax savings account every time you get paid. That way you're not scrambling to find the money when the deadline rolls around. Been there, it's scary. So I want to share a little story with you. Let me tell you about my client. We'll say their name is Alex. A couple of years ago, Alex was making great money as a consultant, but totally ignored those quarterly taxes. When tax season hit, they got slammed with a huge bill and penalties, and it was a financial gut punch. The next year, we put a system in place, tracking income, setting aside that money, and making quarterly payments. When April rolled around, Alex owed nothing extra because they had already covered their taxes throughout the year. No panic, no stress, smooth sailing. That's the power of planning ahead. So, quarterly taxes, they don't have to be overwhelming. With a little bit of planning, they're totally manageable. And dare I say, even empowering, because when you're in control of your numbers, you're in control of your business. If you're not sure where to start, go ahead, grab that cash flow calculator at chamberlainandgoodcompany.com/cashflow. It'll help you estimate your taxes and stay on top of your finances. But before you go, hit that subscribe button so you don't miss more essential tax tips to keep your business running smoothly. Thanks for hanging out with me today in Good Company. I'll see you next time.
Thank you so much for spending time with me on In Good Company. If you loved today's episode, don't forget to subscribe, leave a review, or share it with someone who's building their dream. Looking for more resources? Head to chamberlainandgoodcompany.com for free tools and expert advice. Until next time, keep growing, keep thriving, and remember, you're in good company.